Hello and welcome to Cutting Through the Noise, a weekly investment briefing brought to you by Signature FD, where we bring you our analysis of the economic landscape and help decode last week's market data. I'm Nick Amat, Senior Portfolio Designer, filling in for Tony Welch, CIO, who's out on sabbatical. Last week, U.S. markets rallied on the heels of cooling inflation data. Both CPI and PPI came in below consensus for May 2024. Consumer prices for May remain unchanged month over month, 0%, while year over year changes increased 3.3%. Core prices, which exclude food and energy, increased by 0.2% month over month, increasing year over year by 3.4%. This is the lowest level of core inflation since April 2021. The producer price index fell 0.2% in May month over month, but was up 2.2% year over year. Additionally, import prices fell 0.3% for the month of May. This inflation data suggests that higher inflation in Q1 was an anomaly and that the disinflation process appears to be intact as we move forward. Additionally, Federal Reserve policy meetings concluded last week with policy being held steady. The forecast for interest rate cuts was reduced from 2 cuts this year to just 1. The inflation forecast revised up through year end due to the unfavorable base effects. The stock market strength is likely not dependent on these rate cuts. Rather, it's the stability of the macro variables such as interest rates, oil prices, and the US dollar that are more supportive of stronger corporate profits. From a technical perspective, we have seen some deterioration in short-term market breadth. Some stocks and sectors have been showing some near-term weakness. This is not surprising given relatively optimistic market sentiment. Longer-term trends remain intact and bullish. A healthy condition would be for some form of near-term market pullback that alleviates optimism without much damage to long-term trends. For now, the weight of the evidence remains bullish for stocks and has also been improving for bonds given the softening in inflation data. Thank you all for listening, and we look forward to you tuning in next week.